Alimentation, Couche, gross margins, competitive strengths, and supply chain resilience. Alimentation, Couche, gross margins, competitive strengths, and supply chain resilience. Couche consistently delivers strong gross margins, demonstrating its operational efficiency and pricing power. For fiscal 2023, merchandise gross margins averaged about 33%, while fuel margins hovered around 12%. These margins outpace industry averages, underlining the company's ability to manage costs, negotiate favorable supply terms, and price strategically. Merchandise margins benefit from a well-curated product assortment. High-margin categories such as snacks, beverages, and fresh prepared foods receive priority placement. Additionally, private label offerings, which carry higher margins than branded counterparts, help improve profitability. By employing dynamic pricing strategies, Couche ensures that products remain competitive without eroding margins. Fuel margins, though inherently slimmer than merchandise, still contribute meaningfully to overall performance. The company's geographic diversification helps offset regional demand fluctuations and varying regulatory environments. In certain European markets where competition is less intense, Couche secures stronger fuel margins than it might in North America. Loyalty programs, such as Circle K Rewards, reinforce this advantage by encouraging repeat visits and boosting in-store purchases. Couche supply chain resilience also supports strong gross margins. Its scale enables more effective negotiations with suppliers, resulting in cost savings and consistent product availability. Data-driven inventory management systems reduce waste and minimize stockouts, further stabilizing margins. When inflationary pressures arise, whether from labor, raw materials, or transportation costs, the company can adjust prices methodically, maintaining profitability rather than absorbing the increases. Despite these strengths, emerging trends present challenges. The ongoing shift toward electric vehicles may gradually diminish fuel volumes and place pressure on fuel margins. To counter this, Couche is investing in electric vehicle charging infrastructure, anticipating a long-term pivot away from traditional gasoline sales. By diversifying into high-margin categories like prepared foods and premium beverages, the company reduces its reliance on fuel sales and protects its overall margin profile. Comparing Couche to other players in the space highlights its advantages. Competitors like Casey's General Stores and 7-Eleven face constraints due to less geographic diversification or more intense competition in their home markets. Couche-Tar's broad footprint and scale grant it unique negotiating power and operational flexibility, enabling it to navigate inflation and supply chain disruptions more effectively. In conclusion, Couche-Tar's strong gross margins reflect a combination of smart product selection, pricing agility, supply chain efficiency, and customer loyalty initiatives. While the broader industry may face headwinds like inflation and shifting energy landscapes, Couche-Tar's adaptable approach and diversified revenue streams position it well to maintain its competitive edge in the years ahead. Alimentation, Couche-Tard, free cash flow, investments, and growth opportunities. Couche-Tard's robust free cash flow generation is a cornerstone of its financial strategy. In recent years, the company has consistently produced strong free cash flow, underpinned by its efficient operations, high-margin merchandise categories, and disciplined capital allocation. This steady flow of cash gives Couche-Tard the flexibility to invest in growth initiatives, return capital to shareholders, and reinforce its balance sheet strength. The company's strategic investments often focus on store improvements, technology enhancements, and targeted acquisitions. Modernizing store formats and upgrading in-store equipment can increase sales per square foot while improving the customer experience. Investments in digital tools such as mobile payment systems, loyalty apps, and customer data analytics allow Couche-Tard to refine product offerings, tailor promotions, and boost customer engagement. These enhancements not only improve sales, but also streamline labor requirements, thus controlling operating expenses. Acquisitions remain a key avenue for expansion. Couche-Tard's history of successful deals, ranging from large-scale acquisitions to smaller bolt-on purchases, reflects a careful approach to growth. Before completing a transaction, management thoroughly evaluates regional market dynamics, regulatory landscapes, and cultural nuances. Once integrated, newly acquired stores benefit from centralized procurement, shared logistics infrastructure, and best practice operational protocols. This methodical M&A strategy allows Couche to quickly realize efficiency gains, contributing to higher returns on capital and robust free cash flow conversion. A prime area for future investment is the electric vehicle charging ecosystem. As EV adoption accelerates, Couche aims to position itself as a convenient destination for charging, refreshments, and other services. Although EV infrastructure requires upfront capital, the long-term potential for recurring revenue and customer loyalty justifies the expenditure. By embedding EV charging into its existing store network, the company anticipates drawing new customer segments and increasing dwell times, which can lead to greater in-store sales. Beyond EV infrastructure, Couche identifies growth opportunities in food service offerings, private label expansion, and global market penetration. High-margin prepared foods not only enhance the convenience factor, but also increase average basket size. Private label goods, meanwhile, deliver better margins than national brands and can cultivate brand loyalty. In markets like Asia and Eastern Europe, Couche sees room to establish a stronger presence, leveraging its proven business model to tap into underserved or rapidly developing regions. Inflationary pressures and evolving consumer habits pose challenges that require strategic investment in supply chain optimization. By upgrading distribution centers, implementing real-time inventory tracking, and forging long-term supplier partnerships, Couche can maintain consistent product availability at competitive costs. These measures help the company defend and potentially enhance its free cash flow margin, even in volatile economic conditions. In summary, Couche ability to generate significant free cash flow provides a valuable foundation for long-term growth. This financial strength supports store modernizations, digital integration, and expansions into emerging areas like EV charging and new markets. While inflation and shifting consumer preferences introduce complexities, the company's strategic investments ensure that it remains well-positioned to capitalize on opportunities, respond to industry changes, and sustain its competitive edge. Alimentation, Couche leverage, debt management, and risk mitigation. Couche conservative approach to leverage and debt management underpins its financial stability. This strategy allows the company to pursue growth opportunities without becoming overextended. It also provides a cushion against unexpected macroeconomic shifts, such as recessions, commodity price spikes, or regulatory changes that might disrupt the convenience retail landscape. Historically, Couche has maintained a debt-to-EBITDA ratio that is relatively low compared to industry peers. By keeping leverage in check, the company reduces its interest burden and preserves creditworthiness. This approach supports advantageous borrowing rates, ensuring that when Couche does take on debt, whether for acquisitions, share buybacks, or investments in infrastructure, it does so under favorable terms. The result is lower overall financing costs and a reduced likelihood of financial distress. Another benefit of low leverage is the flexibility it affords during downturns. If consumer spending weakens or fuel margins contract due to macroeconomic turbulence, Couche can rely on its healthy balance sheet to weather the storm. In contrast, competitors that operate with higher leverage may be forced to curtail growth initiatives, sell assets at unfavorable prices, or reduce store hours to preserve liquidity. Couche stable financial position allows it to maintain consistent operations and even capture market share when others pull back. The company's debt maturity schedule is generally well-laddered, meaning that obligations come due at manageable intervals, rather than clustering at a single point in time. This approach lowers refinancing risks and ensures that Couche faces fewer pressures to renegotiate debt under adverse conditions. Furthermore, the company often locks in fixed interest rates for a portion of its debt load. Fixed-rate debt offers protection against rising interest rates and provides greater predictability in long-term financial planning. Risk mitigation extends beyond just managing balance sheet leverage. Couche diversifies its revenue streams geographically, so declines in one region may be offset by stability or growth in another. It also maintains robust supplier relationships and invests in data analytics to anticipate shifts in consumer demand. These strategies help identify vulnerabilities, such as supply chain bottlenecks or shifts in product preferences, before they escalate into larger problems. Even in a shifting energy landscape, Couche-Tar's measured approach to risk helps it adapt to changes like declining gasoline volumes or the rise of electric vehicles. If EV infrastructure requires more upfront capital, the company's financial strength and low leverage enable it to fund these investments without compromising other strategic objectives. In essence, Couche-Tar's prudent debt management and proactive risk mitigation strategies form a foundation for sustainable growth. By keeping leverage modest, spreading out debt maturities, and diversifying across multiple markets, the company reduces its exposure to unforeseen shocks. This financial resilience not only reassures investors, but also positions Couche-Tard to seize opportunities when competitors may be forced to retreat. Alimentation Couche-Tard, valuation multiples versus market position. Couche-Tard's valuation reflects the market's recognition of its strong fundamentals and strategic positioning. Its shares often trade at a price-to-earnings (PE) ratio and an enterprise value to EBITDA (EV/EBITDA) multiple that are broadly in line with or slightly above industry averages. While not typically considered a high-growth stock in the tech or healthcare sense, Couche-Tard commands a valuation premium within the convenience retail sector due to its operational excellence, consistent free cash flow generation, and global diversification. Several factors influence the company's valuation multiples. First, investors appreciate Couche-Tard's proven ability to integrate acquisitions and extract synergies. This track record reduces uncertainty, a valuable trait in a sector where many players struggle to scale efficiently. Second, steady improvements in merchandise margins and a continued push toward higher margin product categories support earnings growth. Finally, the company's strategic initiatives, such as expanding its electric vehicle charging network and enhancing digital engagement, signal a willingness to embrace change, reducing the risk of disruption and justifying a valuation that rewards forward-looking adaptability. When compared to peers like Casey's General Stores, 7-Eleven, or European-based retailers, Couche-Tard generally trades at multiples that reflect its balanced strengths. Casey's, focused on a narrower geographic footprint, might trade at lower multiples due to region-specific risks. 7-Eleven's extensive but saturated market presence in Japan can limit growth expectations, potentially dampening its valuation metrics. Couche-Tard's broader international reach and lower leverage position it as a more resilient and flexible operator. Still, it's essential to recognize that the convenience retail space is not immune to macroeconomic headwinds or consumer habit shifts. If consumer sentiment deteriorates, fuel prices become volatile, or labor costs rise sharply, Couche-Tard's earnings could face pressure. Such developments might compress valuation multiples, especially if investors perceive them as long-term structural challenges rather than short-term setbacks. On the other hand, successful execution in emerging areas, such as making convenience stores appealing destinations for EV charging sessions or leveraging data analytics for personalized merchandising, could unlock valuation expansion. As the energy transition unfolds, there may be a window for Couche-Tard to differentiate itself, turning stores into service hubs for travelers seeking both energy and convenience items. In summary, Couche-Tard's valuation multiples reflect a balance of proven operational strengths, steady cash flow generation, and proactive adaptation to industry changes. While the company may not command the explosive multiples seen in high-growth tech sectors, it has earned the market's confidence through reliability, innovation, and financial discipline. Over time, as Couche-Tard navigates shifting consumer preferences and the evolving energy landscape, its multiples will likely continue to mirror its ability to maintain and enhance its industry leadership. Alimentation, Couche-Tard, strategic adaptation to industry trends, toward EV infrastructure and digital transformation. Couche-Tard's success rests not only on its current operational strengths, but also on its ability to anticipate and adapt to evolving industry trends. Two key areas shaping the future of convenience retail are the adoption of electric vehicles, EVs, and the rise of digital tools that streamline the customer experience. Electric vehicle infrastructure. The ongoing shift from internal combustion engines to EVs poses both a threat and an opportunity for convenience retailers. Traditional gasoline sales, a mainstay of Couche-Tard's revenue, may decline over time as more consumers embrace electric mobility. Recognizing this, the company is proactively investing in EV charging infrastructure at select locations in North America and Europe. By integrating EV chargers into its store network, Couche-Tard aims to become a go-to destination for a new class of motorists. Unlike quick gasoline fill-ups, EV charging requires more time, allowing customers to shop inside the store while waiting. Longer dwell times could translate into higher margin purchases such as freshly prepared meals, coffee, or premium snacks. Early investment in EV charging infrastructure also positions Couche-Tard to build brand loyalty among EV drivers, making its sites synonymous with convenience, comfort, and reliability as the energy landscape evolves. Digital transformation and data analytics. Another critical area of strategic adaptation involves leveraging digital tools and data analytics. Couche-Tard's mobile apps and loyalty programs provide a direct channel to engage customers, understand their preferences, and tailor offerings to individual tastes. This data-driven approach allows the company to optimize store layouts, forecast demand more accurately, and refine its product mix. By sending personalized promotions through mobile platforms, Couche-Tard can increase basket size and frequency of visits. Digital innovations also streamline operations. Self-checkout kiosks and mobile payment options reduce wait times and labor costs, improving the overall customer experience. Real-time inventory tracking enhances supply chain efficiency, ensuring stores remain stocked with popular items. By continually refining its digital capabilities, Couche-Tard positions itself as a modern, tech-savvy retailer that meets customer expectations for convenience and speed. Balancing legacy and innovation. Adapting to industry trends is not about abandoning legacy strengths. Couche-Tard continues to serve millions of customers who rely on traditional fuel and familiar convenience staples. The company's strategy involves a gradual transition. As EV charging stations proliferate and digital engagement becomes the norm, the retailer will adjust its product offerings, store designs, and marketing approaches accordingly. This incremental shift allows the company to mitigate risks while capitalizing on emergent opportunities. Comparative perspective. While many competitors dabble in EV charging or try new digital initiatives, few match Couche-Tard's breadth and executional discipline. Some rivals may introduce EV chargers without a coherent in-store strategy, missing the chance to capitalize on dwell times. Others may roll out mobile apps that lack robust data analytics, failing to derive meaningful insights into customer behavior. Couche-Tard's integrated approach, where physical and digital assets complement each other, creates a competitive advantage that is difficult to replicate. In essence, Couche-Tard's willingness to invest in EV infrastructure and embrace digital transformation demonstrates a forward-looking mindset. By diversifying energy offerings and leveraging technology to enhance the retail experience, the company is positioning itself for sustained relevance. As trends evolve, Couche-Tard's thoughtful adaptation ensures that it remains at the forefront of convenience retail, ready to meet the needs of both today's and tomorrow's customers. Alimentation Couche-Tard, sustainability initiatives, and ESG positioning. In the evolving global business environment, stakeholders increasingly value companies that prioritize environmental, social, and governance (ESG) considerations. Couche-Tard recognizes that sustainability efforts not only improve its brand reputation, but also mitigate risks and create new opportunities in a rapidly changing market. Environmental initiatives. Couche-Tard takes a multifaceted approach to environmental responsibility. First, it invests in energy-efficient store designs and equipment. Upgraded refrigeration units, LED lighting, and automated HVAC systems reduce energy consumption and operating costs. These measures not only trim the company's carbon footprint, but also resonate with consumers who appreciate eco-friendly business practices. Beyond store operations, Couche-Tard seeks to lower its overall environmental impact by partnering with suppliers committed to sustainable sourcing. This involves ensuring that raw materials, such as coffee beans or packaging materials, come from responsible sources. Steps like reducing single-use plastics and improving packaging recyclability further align with consumer preferences and emerging regulatory standards. Social responsibility and community engagement. As a large employer operating in diverse regions, Couche understands the importance of social responsibility. It emphasizes fair labor practices, job training, and local hiring. By creating employment opportunities in both urban and rural areas, the company supports local economies and strengthens its community ties. Couche also engages in charitable activities, often at the local store level. By contributing to neighborhood initiatives, educational programs, and disaster relief efforts, the company fosters goodwill and trust. This community-centered approach can pay dividends in customer loyalty and employee satisfaction, both of which influence long-term success. Governance and accountability. On the governance front, Couche promotes transparency and accountability. The board of directors includes members with diverse backgrounds and areas of expertise. These directors bring fresh perspectives on topics like technology, international markets, and sustainability. Performance-based executive compensation structures further ensure that management decisions align with shareholder interests and longer-term strategic goals. Robust risk management frameworks help identify potential ESG pitfalls. For example, the company conducts regular assessments to evaluate energy usage, safety standards, and supply chain compliance. By addressing issues proactively, Couche reduces the likelihood of regulatory penalties, reputational damage, or costly operational disruptions. Integration into strategic planning. Unlike companies that treat ESG as an afterthought, Couche integrates sustainability into its strategic planning. Whether developing new store formats, choosing acquisition targets, or investing in EV charging stations, the company considers long-term environmental and social impacts. This holistic approach increases resilience in the face of regulatory changes or shifting consumer expectations. Positioning relative to peers. While many convenience and retail operators are starting to embrace ESG, Couche-Tard's scale and financial strength enable more substantial, consistent efforts. Rivals with limited resources may struggle to implement meaningful environmental upgrades or invest in community outreach programs at the same pace. As sustainability becomes a stronger differentiator in the market, Couche-Tard's proactive stance could enhance its competitive positioning. In summary, Couche-Tard's ESG initiatives reflect a commitment to responsible growth. By improving energy efficiency, fostering community relationships, and maintaining strong governance, the company not only meets evolving stakeholder expectations, but also sets itself up for long-term value creation. As environmental and social priorities gain prominence, Couche-Tard's integrated approach to ESG will likely prove instrumental in maintaining its leadership within the global convenience retail industry. Alimentation Couche-Tard, management and governance, execution strengths and shareholder alignment. Couche-Tard's enduring success is closely tied to the quality of its leadership and the effectiveness of its governance structures. Over the years, the company has cultivated a management philosophy rooted in discipline, capital allocation, operational excellence, and strategic foresight. This approach helps ensure that every decision, whether related to acquisitions, store improvements, or new product introductions, advances long-term shareholder interests. Strategic leadership and decentralized decision-making. One of Couche-Tard's strengths lies in its ability to balance centralized strategies with local insights. While the company maintains core global standards for branding, procurement, and operational efficiency, it also empowers regional managers to make decisions that address local tastes and market conditions. This combination of a top-down framework and bottom-up feedback fosters both consistency and agility, enabling Couche-Tard to remain nimble even as it expands its geographic footprint. Performance-based incentives and alignment with shareholders. Senior executives and key managers are often rewarded based on metrics like return on invested capital, free cash flow generation, and earnings growth. Tying compensation to these performance indicators ensures that leadership remains focused on sustainable, value-enhancing activities rather than short-term gains. As a result, management's interests are more closely aligned with those of shareholders, promoting steady growth over the long run. Board composition and oversight. The company's board of directors includes individuals with diverse backgrounds and areas of expertise. Some members bring deep knowledge of retail operations, while others contribute experience in international markets, finance, or emerging technologies. This diversity improves the board's ability to identify risks, evaluate growth opportunities, and hold management accountable. Regular performance reviews, strategic planning sessions, and robust internal controls further strengthen governance, ensuring that the company adheres to ethical standards and sound business practices. Succession planning and leadership development. Effective governance also extends to the cultivation of future leaders. Couche invests in training and development programs designed to identify and mentor high-potential employees. By doing so, the company creates a stable pipeline of talent capable of stepping into leadership roles as the business evolves. This foresight reduces the risk of leadership gaps and maintains operational continuity during periods of strategic change. Shareholder communication and transparency. Couche regularly engages with investors through earnings calls, investor presentations, and periodic strategy updates. Management's willingness to explain its rationale for acquisitions, capital expenditures, and new initiatives helps build trust and fosters a shared understanding of the company's long-term vision. Clear, consistent messaging minimizes surprises and encourages investors to evaluate the company based on fundamentals rather than speculation. Comparative perspective. In contrast to competitors that may rely heavily on the personal vision of a single leader or lack a deep bench of managerial talent, Couche-Tard's structured yet flexible governance model distributes decision-making across a well-prepared leadership team. This approach allows the company to adapt to industry shifts without depending too heavily on any one individual's influence, reducing key person risk and reinforcing organizational resilience. In summary, Couche-Tard's management and governance principles support a stable, growth-oriented environment. By rewarding performance, encouraging transparency, and investing in leadership development, the company maintains a high degree of strategic discipline. These qualities enable Couche-Tard to remain a strong competitor and a reliable steward of shareholder capital, even as it confronts evolving market conditions and new growth opportunities. Alimentation Couche-Tard, future outlook and long-term resilience. As the convenience retail industry evolves, Alimentation Couche-Tard's future success will hinge on its ability to adapt to changing market conditions, consumer preferences, and technological advancements. The company's proven track record of capital discipline, operational efficiency, and strategic foresight positions it well to navigate both foreseeable challenges and unexpected disruptions. Adapting to an evolving energy landscape, a major shift in the coming years will be the gradual decline of gasoline demand as more drivers adopt electric vehicles. Couche-Tard's early investments in EV charging infrastructure provide a solid foundation for embracing this energy transition. By turning its stores into destinations for both convenience items and charging services, the company can maintain traffic levels and capture new revenue streams as the automotive landscape changes. This forward-looking strategy helps ensure that Couche-Tard remains relevant even as traditional fuel sales potentially diminish over time. Diversification of product offerings. Another key factor for long-term resilience is the ability to broaden merchandise assortments. Couche-Tard's expansion into higher-margin prepared foods, premium beverages, and private label products enhances its relevance to customers. As tastes shift toward healthier options or more sustainable goods, the company can adjust its product mix accordingly. This flexibility reduces dependence on any single category, making earnings more stable when consumer trends evolve. Leveraging data and technology. In the coming years, successful retailers will be those that harness data analytics to personalize the shopping experience. Couche-Tard's investments in digital tools and customer loyalty programs set the stage for deeper engagement. By analyzing purchasing patterns, the company can predict demand, tailor promotions, and optimize store layouts. Such capabilities improve inventory management and reduce waste, contributing to more consistent margins and sustained profitability. Global expansion and market penetration. Although Couche-Tard already operates in multiple countries, it still has room to enter new markets and strengthen its presence where competition is fragmented. Emerging economies with growing middle classes represent fertile ground for convenience retail. Strategic acquisitions and careful market research can open doors to untapped regions, spreading risk and lessening reliance on mature markets where growth may slow. Resilience amid economic cycles. One of the company's core strengths is its ability to perform through various economic cycles. When recessions or inflationary periods occur, Couche-Tard's efficient operations, strong balance sheet, and pricing power help sustain profitability. During more favorable conditions, it has the firepower to invest in innovation and expansion. This balance ensures that short-term shocks do not derail long-term strategy. Sustainability and regulatory considerations. As environmental and social factors play an increasingly important role in both consumer behavior and government policy, Couche-Tard's ESG initiatives enhance its resilience. By reducing energy consumption, improving community engagement, and maintaining transparent governance, the company guards against reputational risks and potential regulatory challenges. In a world where stakeholders demand more accountability, this focus on sustainability could become a source of competitive advantage. In summary, Couche-Tard's future outlook reflects a combination of confidence and caution. While the industry will undoubtedly face headwinds, the company's adaptability, innovation, and financial strength equip it to respond effectively. By embracing the energy transition, diversifying its offerings, leveraging data, expanding internationally, and remaining committed to ESG principles, Couche-Tard stands poised to remain a prominent, resilient force in global convenience retail for years to come. Alimentation, Couche-Tard. Conclusion. Key drivers, risks, and valuation dynamics. Alimentation Couche-Tard's success story is one defined by strategic foresight, disciplined execution, and a willingness to adapt. Across multiple dimensions, returns on capital, gross margin strength, free cash flow generation, careful debt management, strategic growth initiatives, sustainability efforts, and strong governance. The company has consistently demonstrated a balanced approach to building and preserving value. Several key drivers underlie Couche-Tard's performance. Its operational efficiency and scale create cost advantages and pricing power, enabling steady margin maintenance even amid inflationary pressures. Its disciplined approach to acquisitions and capital allocation fosters sustainable returns on capital, while prudent debt management ensures financial resilience. Global diversification helps buffer the company against regional downturns, and a willingness to embrace new energy sources, digital technologies, and evolving consumer taste positions it advantageously for the future. At the same time, the company faces notable risks. The gradual shift from gasoline to electric mobility threatens fuel margins and traffic patterns at traditional forecourts. Inflation, labor costs, and supply chain disruptions can test the stability of merchandise margins. Regulatory changes and evolving environmental standards require ongoing investment in ESG initiatives. Consumer preferences may shift unpredictably, requiring agile responses in product assortment and store formats. Despite these challenges, Couche-Tard's adaptability, proactive investments in EV infrastructure, digital transformation, and ESG integration suggest it can navigate uncertainties and secure long-term relevance. Its valuation multiples reflect a measured confidence in the company's ability to sustain growth and earnings quality, balancing current profitability against the promise of future innovation. In essence, Couche-Tard occupies a unique and advantageous position in the global convenience retail sector. While no business model is immune to disruption, Couche-Tard's track record of seizing opportunities, mitigating risks, and realigning its strategy for new market realities leaves it well prepared. As energy transitions unfold, technology evolves, and consumer demands shift, Couche-Tard stands poised to remain a leader, adapting and thriving in an ever-changing landscape.